hello guys. Sorry the sorry for this. It cuts, I don't know why. So as I told you, let me see the thing. It means it says excellent connection right now. So as I told you, there is a problem. It means there is a problem with mutual funds, and you can check the fees. You can check that it is slow. And guys, if you own, I know most of the people here in USA, most of them, they have 401k or something similar. They say a retirement plan, but this, I'm telling you, yes, it is for retirement, but it is an investing plan. You invest, but the problem, they give you the worst investment you can ever think about, because it's against your investment. It is against, okay? Because they take a lot of fees. We have thousands and thousands of stocks in these mutual funds, so your mutual fund doesn't grow that fast. Okay? Now, have you ever asked yourself why they don't let you free to choose your stocks? Have you ever thought about that? I hope one day you thought about it. Now, what's the difference when you buy stocks or you buy mutual funds? It's not just because mutual funds are slow and stock market, like other stocks, are good. It's not because of that. The problem is that when you buy stocks, there is no fees. So you see the trick? You see why they offer you something for investment? And you say to yourself, oh, they are helping me. Okay? Why they don't let you free? It's a broker, because this broker, when you send the money, it is broker. It means as if you take your money from your bank account and you send it to your broker. It's a simple thing, and they don't charge you. Okay, so brokers, they don't charge when you send them money to your account. But the problem with 401k, it is a broker that has mutual funds, and each mutual fund is asking for fees. This is the trick. This is why we have this 401k. So understand that this thing, it's not as easy as you might think. Those Wall Street guys, when I say Wall Street, it means, I said, when I use Wall Street, what does it mean? It means anyone who is working without risk in the market. The manager of a mutual fund, he has no risk by himself. He only takes the 2% or 3%. Do you understand how much is 2% or 3% from 10 billion, from 20 billion, 100 billion? There are some mutual funds that are so big. So you understand that? This money that they take is for free. They take billions and billions of dollars as a profit. But your account is not doing that good. And if you are 60 and you have 100,000 or 200,000, your account is so small. Because if you want to take only 2,000 each month in order to assist your bills and the other stuff, it can't stay that long. I give you an example of 100,000. If you take or you cut $2,000 each month, so it's 50 months. Okay, so it's only 50 months. It's like 5 years. So do you think that that all your retirement, 100,000, all your retirement after 40 years of work or 35 years of work, and then you get 100,000, and then in 5 years you can wipe out your account? So where is this this retirement plan? Where is it? It doesn't exist. This is just when they say retirement plan is to make you think that it is a retirement, but it is not. You invest, they ask you to invest, and they take fees. And in general, when you buy stocks, they don't ask you fees. So why should I buy a mutual fund and he asked me fees 2 or 3%? Oh, 4 years and 2 months. Thank you, Flint Wagner, for calculating. So I'm just doing it by my head, you know. Thank you very much, Flint Wagner. So, as you can see, the 401k, yes, it is a means of investing, but it is too bad. The money that the company gives you as matching, if you calculate this, you find that your 401k, it cuts it. It means as if your company doesn't give you any money because the fees are maybe more than what they give you. You can calculate that by yourself. You can ask your 401k how much you give in each year, like the maximum they give you as what you do, and you can calculate that, and you can see if you are good or no. But to understand that most of the time what the company gives you is taken by this mutual funds. So you are not as if the company is giving money to this mutual funds. Okay, so it's just a game of fees. That's why if you ask yourself why they don't let you be free in your money, you say, okay, man, I want to buy stocks that I like, to invest in some companies that I like. I don't want you to invest in mutual funds. They will refuse. Because this is the way it is done. And the way it is done is to take more fees and to take more money. And you can check that for sure. Okay, you can check that. All this 401k and some other people who have other plans. You can other plans. I don't know the other plans. The most important thing is 401k in America, but there are other plans. Okay, for universities, education, we have other things. So you can check. You can check that it's like you are ripped off. And this is your entire investment in the whole life. When you are 60, you want to stop working and just take free time to go to travel, to go to do what you like. For example, if you have hobbies, and then you find yourself trapped that your income is small with Social Security income, and then you can't even pay for your bills. If you don't have a home that you have already bought, you will be in trouble. You have to come to work again. I have seen people who are 80, 90 until they die and they still work. It's not because they like to work, but because they don't have money. All their 401k is a rip-off. They don't get enough money to live with their 401k. You understand? So this issue of investment, I'm just trying to explain more and more. At least you have an idea. If you are young, like let's say you are 20, 30, 40, 50, at least you have these years, you should think about it seriously. Because if you go to retirement with 100,000 or 200,000, believe it or not, if your Social Security income is small, believe it or not, and you don't have a house, you are still renting, you will be in real trouble. and no one will help you. No one will help you. Life is so hard. So don't take it easy and just don't think about investment. Investment, especially in America, you can be a millionaire if you invest well. Okay? You can be a millionaire if you invest well and you have money to live from dividend. This is what the people are asking. To live from dividend. Okay? Now, let's go now. What if you invest from without using a 401k? What will happen? I believe myself, if you make an account by yourself, especially Roth IRA, where you don't pay tax, because Roth IRA. Hello, Pablo Diaz. Thank you very much for coming. It means Roth IRA. It has a lot of advantages. All the money that you put. Let's say you are 60. Okay. Let's say you are 60, and you have $200,000 in your Roth IRA, and you have you have $200,000 in 401k. What's the difference? The difference is that, let's say in Roth IRA you have contributed $100,000 during 30 years. It's your own money. It's taxed money. It was taxed, as usual. You have your paycheck, and you take $100, $200, $300, and you put them aside. You send them to your broker, and you buy some shares, whatever is the stock that you buy, for a long investment. Let's say when you are 60, you have $200,000 in Roth IRA. Let's say you have $100,000. It's your money. The other $100,000 is your profits through this. Maybe you have made 100%, but in general, you will be making 500, 700, 1,000%, because it's all the life. Okay, it's not. If you go to Dow Jones and you see in 20 years how much the market has gone, you can check that. Let's say I give you an example with Dow Jones. Just an example, okay? Let's say I take the years. Okay. So we are in 2020. We look for 2010. 8, 10. Okay. 10. Is it here? 99. 2000. So $16 for 20 years, it's nearly 300%. Okay? It's nearly 300%. But I don't know. Let me see if the chart is giving me more. The chart doesn't give me more than that. I don't know what's the problem with the chart. Before the chart give me better than this quarterly. Okay, let's think it is okay. It doesn't move that fast. But before I see from the beginning. I don't know why it gives me. Okay, there is no problem. So let's continue. Okay, let's say it is 300%. Okay. Let's say we change the price. Let's say you get 300,000 in 401k and 300,000 in your Roth IRA. Now 100,000 if you take that money, okay, it is your own money. So there is no, even if you want to take it to buy a home, or to finish your home to buy, or to go live in a very cheap country like Thailand or Philippines or the other thing, okay, so it means 100,000. There is no tax, because it is already taxed before. So this money is yours, and you can take it. And the government, the IRS, they don't say to you nothing, because it is taxed. This is how Roth IRA works. But the other 200, you should pay tax on them, because it's profits. Now, the 401k, the whole 300,000, you should tax. You should pay tax. If you take whatever money, you should pay tax. And it is like a new income for you. Although it is an old income, but they charge you whenever you take. You take 20,000 or 30,000, you should add it to your income of the year, and then they tax you according to your tax brackets. You see that? So, you will see that your account, believe it or not, even if you are not a professional investor, you are not, but your account will be doing better than this 401k. Because 401k, it is so slow. It is full of bad stocks. They can't move fast. For you, if you find a stock that you invest in, but there is a lot of problems with the company, and the company is going down, you can sell it and buy another one. You can make a decision. But if you let someone else do the decision for you, for your future, understand that he doesn't care that much. He doesn't care, because he gets his money, percentage of the account, for free. So either the account is good or bad. Sometimes they fire some mutual fund managers if there is a big problem in the account. But most of the time, they are not fired, and they stay the whole life making easy money, and it is a lot of money. A lot of money, I'm telling you. There is one guy, 2 years or 3 years ago, he got, I think, 2 or 3% from the account. He got $3 billion for 1 year. So you ask yourself, how can this guy make $3 billion in 1 year, and he doesn't own nothing? You see that how Wall Street gets money? Now you understand this thing. Okay? Guys, I will answer your questions when I finish developing this subject. Okay? Tamba Nair said, what charting software are you using? Tamba Nair, you have been here for long. So how come you just ask me now? You can send me an email before and you say, what's this chart? Okay? So there is a training. If you go to my website, there is a training about a chart. I will see if I can give you the thing. You can check it. At least you have an idea. I will see if I can manage that. Hope it is accepted, because sometimes yes, check Nair. This is the training, and I will send you the chart itself. It's a free chart. Yes, this is the chart. You should install it. And I am using it in my subscriptions and in my thing. Okay? So I'm telling you, if you are investing by yourself, you could beat this 401k. Okay? You can beat it by yourself, because we have a lot of trouble with this 401k that it is so slow, and you can invest yourself. It's better. That's why, for example, if you take Warren Buffett, who is one of the well-known investors, he has never bought mutual fund because he chooses stocks by himself. There is no fees. For example, if you buy a stock, it stays in your account 50 years. When you are 20, now you are 70. Okay? No one will ask you any money. The broker, which is very, very good, they don't ask you fees. The only thing they ask you, if you do trading, or if you ask him a margin account, it means a margin money. Yes, they will charge you interest rate and the other stuff. Now, then let's go to another subject, which we are still in the investing account. Another thing that you should never do, I'm telling you right now. Maybe you get greed. You get greed in your thinking, and you think that with a margin account, you can invest with the money that you borrow, like the margin account that you have. Let's say you, for example, you have $10,000. Your broker gives you 10,000, so you have 20,000, and you are investing. Let's say you are investing 20,000 in stocks, but understand that your broker is charging you interest rates. If it is 6%, 8%, 10%, or even 12% or 15%, depending on the broker. If they charge you too much, now what does it mean? It means you will be working for him all your life. You see that your account doesn't grow that fast. Even if you succeed, even if your stocks are doing good. But the problem, fees kills your profits. Okay? Okay? So you understand that? So a rule in investing, a basic rule: never invest with a borrowed money, even if it's not the broker, even if it's your father, your mother, your sister, your son, or your neighbors, or you go to the bank and you borrow money and you think that you are a genius and you will be making money because you borrow money, because you don't have money. If you don't have money, don't invest. But investing, it doesn't mean that you should have money. Investment is something for the long run. You should make your account slowly by adding money each paycheck. This is how do we make a bigger account. You should have a habit of investing. Now I'll give you an example. I think last week I have given you the same example with what we call personal finance. It means if you let's say we compare two guys. This is personal finance. Someone is making $5,000. His friend making $5,000. The same. They go to the same company and they do hello Robert Tijan. And they go to the same company, they have the same jobs, and they are getting 5,000. Understand? Okay? Understand that following these steps, what I mean, it means if you are investing and these two guys having the same 5,000 a month, this is a salary, for example. Believe it or not, you will what is the thing? If you have the same guys, believe it or not, their behavior regarding money will be different. There are some people who spend all their money. They see that the money is coming is a lot. For example, someone who has $5,000. Let's say he has an apartment or whatever, 1,000 or 1,500. So he has a lot of money. He begins to do luxuries. He has, for example, 200 or 300 like a TV 4 channels. He has the best phone with 1,000 or 1,500. He will have a car with 50,000 or 70,000. He will have a single home with 500,000. It means he will spend all his money. Do you think that this guy, if he lost his job, do you think he will survive? He will not survive. All the things that he has will be going, and he will be in the street. But you find other people who are excellent. I have taught someone before. Hello, Fabian. Thank you very much for coming. I have taught someone before. He put 25% of his money into his investing account. Okay, so I say to him, you are excellent, because the rule for investing is the best you can do if you are a good investor is 10% of your money. Okay, 10%. Let's say you make 60,000. You have 6,000 this year. Put it in an account. You are excellent, because you have bills. You have to have entertainment. You have a lot of stuff. You have so it's good. But at least you have 10%. Some people, they can't make 10%. They can't do 2%, 1%, 5%. But the more you save, the better for you in the future. Even if you don't use it in the retirement, but whenever you need your money, you find your money. This is why it is so important to think about investing, and to think about what we call personal finance. You should have a basic thing you should think about. Never forget about investing, because like some people who do, like for example, emergency fund, which should be from 3 months to 6 months bills. Let's say you spend $5,000 a month. This is what you get and what you spend. You should have at least in your emergency fund 3 times. It means from 3 times to 6 times. It means from 3 months to 6 months. Let's say you lost your job. If you have this $30,000, okay, 30,000, because it is 6 times. It means 6 months of your income. So at least you will not be in trouble. If you have a mortgage, you could still pay your mortgage. You should still pay your car, and then until you find another job. But suppose that you don't have, and you don't have money into your investing. You don't have a 401k. You have nothing. So what will happen to you? You will be in the street right away. Okay, you will be in the street if you don't have a family that accepts you. But when you have a wife, you have kids, it's very, very troublesome to go to someone and live with him. Like that. Okay? So, Robert Tijan, I'm not answering the questions right now. I will begin with the first questions. So, guys, I'm continuing to speak. Let's see here. Yes. I have about 10 or 15 minutes. Whenever I finish developing the subject, because I have spoken about something else, when I finish developing the subject and I finish, I will go one by one as usual. I will go one by one, okay? And I answer all your questions. So don't worry, just ask questions and I will be happy to answer them. Now, we have spoken about investing account, and we've spoken about 401k, that it is an investing plan, but it is not as good as the people think. There are a lot of fees. You don't have a freedom. And you should pay fees until the deadline, until the end. And understand that 401k, it is not taxed. So, what does it mean? It means when you are 60 and you want to take money, they should take their tax according to your tax brackets. With your income, they put with your income. And I give you an example. I have given you this example at first. I know some people, they come later. I give you an example. Let's say at 60, they give you, you have 100,000 only. So Philip Wagner has calculated this. It's 4 years, 2 months. Okay? So it means that 100,000 that you think it's retirement, it only be valid for 4 years and 2 months. What does it mean? It means after 4 years and 2 months, you have no 401k. The 100,000 is gone. So is this an investment? No. No, it is not investment. So whatever is your age, I'm not saying that whatever your age, you should think about how much money you should have. What means of investment are you doing? And is it faster or is it slower? How can you change that? So this is a very, very important thing I'm telling you. If you don't think about it, one day you will remember my words and you say, oh, that guy, Djellala Karim, that guy have said this, but I forgot. You cannot forget about your investment because it is your life. Money is your blood. Money is your blood. It means someone who loses blood, he will faint and he will die. This is just normal as that. Okay? So you need a lot of money. It's not by gambling or by doing lottery all your life. I know most of the people, you have one chance from 1 billion chance to succeed in all your life putting money. No, I'm not speaking about gambling. I'm speaking about realistic thing. You can make your account. You can contribute your account each paycheck. You can put your money into your broker, buy shares of some companies. You just make a search. If you don't know how to search what companies, you can check my training about investing. I give you ways how to make your account to become bigger and bigger in investing. We have 2 training, one in video and one in ebook. So please check the ebooks and the training by videos. So it means that you should do something. It means you should take your investment in your hands. Now, I'll give you a simple example. Okay? Let's say you are married, you have a wife, she doesn't work, she is at home. Let's say you make $5,000 and she tells you, oh, okay, listen, you work and I spend the money. Do you accept that? So most of the time, most men, 99.99, they will never give their money even to their wives. Do you understand why? Because it is your money and you should make sure everything is okay with you, with your family. If you give it to a woman, maybe she bought clothing, maybe she bought furniture, or she buys here and there, and then at the end of the month you have bills to pay and you don't find money. Okay? Yes, there are some women that are better than men. Yes, this is for sure. But I'm speaking about even a woman. If she works and her husband has problems, he doesn't work, and he asks her, okay, can you give me your money and I will spend it and don't worry? No, she will not. Most of the time, she will not. Why? Because we have this idea of owning our money and our work. So how can you give your money to a stranger who is a mutual fund manager? He is a stranger. He can do, even if you lose all your money, he doesn't care. Who cares? He is just a worker. He works, he got a very big percentage. He makes a lot of money in his life and he invests with his own way. so he is living the well life or the better life. But you, all of us that we contribute, we don't get nothing very serious. Okay, so now, since we are at the end of the explanation, let's go now to trading account. Trading account is when you do your your trading. I'm not here speaking about investment, because before I go to trading account, there are a lot of people, they do mistakes, especially in tax. You will have tax problems. Believe it or not, try to make 2 accounts in the same broker or different broker. It's not important. Let's say you have 2 accounts. One is trading account. It's not Roth IRA. Roth IRA, you do it for you do it, for example, for investment. And because what is the difference? First, the difference. Hey, GPP stocks. Hi, thank you very much for coming. So, what's the difference between a trading account and an investment account? What's the difference? The difference is that when you invest for at least 20 years, as Warren Buffett said. It means he said to you, you are investing in a company, so don't rush. It's not a company that you don't see 1 year, 2 years, you don't see any money. You begin to frustrated, and then you sell, you buy another one, you get frustrated. So you just lose your temper, and you become angry. So what you should do, you should find strong companies. And this, you should need some criteria. I'm not here to speak about my training, but you should have some criteria. You can check golden subscription. I have my investing account. You can check it. We have put $100,000. It means like a virtual account, and I bought 10 stocks. Okay, 10 stocks I bought. So you can check my, you can subscribe for 1 month, and you see this investing account. Now, trading account, you mean you should buy and sell. You should not invest, because you should make these 2 accounts different. Now, why? Because when you are doing tax, each year, they give you your statement. Okay? Investing account, your broker, it will be your tax preparer. It will be very easy for him to deal with the investment, because if there is no sale, there is nothing reported. No, because when you buy, nothing, you buy, yes, it's reported. But if you don't sell, the government, the IRS, is not interested in you. They have the information, but it's just because your broker gives you information, you should give it to them. But there is no impact on your tax. But in the trading account, there is an impact if it is trading account, not Roth IRA, because Roth IRA, they don't care what you do there, because it is an investment plan. Either you buy, you sell, they don't care about you. This is because it is called, it's an investment plan. So your trading account, because you trade, you buy and you sell, you buy and you sell. So if you make money each year, they will tax you, because you make an income from this trading account. Okay? So it should be different. So for you guys, if you are going in the future to make an investment, try not to mix it with your trading. Okay? Try not to. It's just for tax reasons, and for you it's very good, because let's say you have $10,000 in 2019. $10,000. I know you are contributing each time and you are putting more money into your account. This is the best way to do in investing. But you can see how much you make each year, which is very, very simple. You can just put small notes in your notebook or online, and you just each year in 31st of December, you just see your account, how much is it and how much you make from the beginning of the year to 1 year, and from the beginning of how much money you have in the first year you begin investing. Let's say you begin investing in 2010, so you have 10 years. So you will see how much you make from the first year to this year, okay? It's very easy. But if you put stocks in it, it will be troublesome. It will be troublesome because it's all mixed up. You don't know what you are investing in. Sometimes you want to sell this, you sell your investment, and then you buy it again, and then you will have a lot of troubles. So my suggestion is, if you have for example, a trading account, it should be separate. And even if you are a good trader and you are making money, you can do a business account. A business account, it means you put commissions, you put training, you should take all this money from as expenses. For example, let's say you bought my training, the whole training, which is 20 training by videos or by videos or by ebooks. Now, this money that you bought with, you can take it as an expense in your business account. Okay? As an expense, so you as if you are not making that much money because it goes lower. This is very good in terms of tax. So because in a business you can claim a lot of expenses. Okay? A lot of expenses, and this will reduce your income, and then you reduce your tax you pay. That's why most of the people, they told you, okay, do a business, don't do a job. You can do a job in your first years to get some money and then when you want to do business, whatever is the business, and you make money, and you will be making more money than your job, which is very good. Okay, so let's talk now about trading account. Trading account. You can trade with low risk, or we can trade with high risk. So, what's the difference? For example, you have an account. Let's say you begin with $10,000. Let's say next year you make $1,000, 10%. Just an example, okay? So, 10% you make from last year work. You compare it with the market, with Dow Jones, for example, or in general S&P 500. You take S&P 500 performance each year, and you see how much S&P 500 has done. It has done 10% or 7% or 15%, and you compare it. If you want to compare, okay? If you don't, there is no worry, because you should not compete with anyone. Understand that this is a business. The businesses are not the same. Some businesses are excellent, some businesses are bad. So if you are a trader, you could be a good trader, you could be a medium trader, you could be a bad trader, you could be a loser. So it depends. So don't worry a lot about this. And this is the thing about trading. If you want your account to be growing fast, you should do high risk stocks. And this, it can make your trading account bigger if you are a good trader. But if you are a bad trader, it can make your account look bad, because you are doing difficult stocks. For example, technology stocks, drug stocks sectors, almost all these are dangerous. dangerous. You should know what you are doing, because if you have no mastery of risk, you could lose a lot of money. But on the other hand, you can make a lot of money. This is a good thing also. Okay? So think about this. Think about how to manage your account. Now, for me, I have training. I have two training. One is training level 8, which is how to minimize risk and how to maximize risk. How to minimize risk and maximize profits. And I have, I think, training level 19, which is how to manage your trading account. But a lot of people, they don't buy this training, although the training is about risk. Because the people, they have misunderstanding of what is trading. Trading, first, you should master the risk. If you are a good trader, you know what is your risk, and you should exit when the risk comes. You should not stay more. For example, and this has nothing to do just with the stop loss, because a lot of people, they think, managing risk is only stop loss. No, there are a lot of things. These things you should learn and you should know about them. If you don't know, you will have a problem in your trading account, but you will never know what is the problem. Sometimes you see that you have a lot of trades that are good, but when you see the money, you don't see any money. You see a small profit, 5%, 10%, 15%, and you say, why I am doing good trades, but I don't see the money? It's just because your trading account management is weak. You are weak in managing your account. Okay? You are weak. That's why you will have problem in the performance. These things needs months and years to grasp. This is not a fast food. For me, my training is hello Golden Gun Gamer. My training is not a fast food training. Just in one night you read one training or two, and then tomorrow you become a professional trader. It doesn't help like this. It doesn't work like this. That's why most of the people, they don't want to learn for real. They don't want to learn for real. They want just give me a stock that goes 200%, 300% a day, and that's it. Like penny stocks, like thing. But those are risky. You can make 100% today, and you can lose 90% next day. So you lose almost all your money. So understand that managing your account, knowing how to trade, stocks that you choose, because the more you go to smaller stocks, the more you go to even there are some stocks that are big, but there are very risky drug companies. But for me, I like them. Believe it or not. Why? Because I like stocks that are wide, that they can make they can go so good when they are good. So I am just having opportunities to choose those stocks on time. And this is why I am teaching my strategies. So one time, it happens like 3 weeks ago, 4 weeks ago, there is one stock. For 1 week, I got, it's big stock. It's not a $5 or $2 penny stock. No. It's a stock. It's not a penny stock. I got 32% in 1 week, 5 days. 32% in 5 days, it means in the week, I sold. And I have proof, because I told my guys I have bought this stock, and they see it. And next week I tell them there is 32%. I sold it, and they see it. It means it's a true thing. Okay, it's not. I'm not trading in the past. I say to you, this stock it goes to 200%. I bought it last week. No, I don't. I have never said that. But now, since we have the trading account, I showed them what I bought, what I sold, what is the problems, what is the solutions. So it's very, very good. Okay. So I guess, guys, I finished my explanation for this, how to grow your trading account. and I said trading account, you should manage it well. This is the one basic thing. Without speaking about when to buy, when to sell, how to follow the trend and other stuff. Like stop loss and how to manage all the stocks in the portfolio. What is your risk in the portfolio? All this stuff you should know. These are important things. But most of the people, they don't want to learn. So that's why some people, they lose money, but they don't know. For me, if someone loses money, and I tell him, the first thing I tell him, how much is your account? How many stocks you have? And I see his stocks, what are they? It means I see what does he do. And then I have an idea what is his problem. In order to fix his problem, I should know what he's doing. Not just, I lost money, I want to make money. This is stupid. No one is doing that. I should check what you are doing. At least I know what is your problems. Now, thank you very much, guys. So now I will go with the first, with Tamba Nair. He said, what charting software are you using? So I have sent you, Tamba, I have sent you the software. This software I discovered in 2010. When I begin trading, I don't find it. I don't know. I used the broker chart. It was so bad. I use other charts. I don't feel well. I don't feel well with these charts. Then I discover it. And do you know that this chart is from North Carolina? It is from North Carolina. There is a company that makes this software, which is one of the best charts I have ever seen. It fits my strategies, because you put lines very, very quick. But if you go to another chart, you want to put a horizontal line, you can't change it, you can't put the right price, so it doesn't help me. So that's why I stick to it for 10 years. And there is a training. Tamba, I send you the training, you click that, you go to the training. We have, I don't know how many videos, 10 videos or 20, or you study this, you download it, and it's a browser thing, and you make an account, and then you will see the same as thing. But there are things you can change, you can adjust, and you will be seeing the same thing as I see. Also, it has all the stocks. It has ETFs, it has mutual funds, it shows you Morningstar sectors and industries. It shows you almost the what we call the indexes. You can click the index, for example, Dow Jones. It gives you 30 stocks. You see them. It means it is excellent. I have never seen. Guys, if you see another chart that it is better than this, please send me the link. At least I will compare them. Okay? Now, second, O2 has said, if you are a good trader and you trade for 10, 20 years and you don't eat from your account, you should be a millionaire before retirement. Okay. Understand that O2, there are things that maybe you don't grasp. Okay? If you have a small account, let's say you have $10,000, how can you live from the $10,000? Even if you make 100%, which is a very, very large thing, even if you make 100% each year, let's say 10,000, you make 10,000. You should have a job in order to live. At least 5-10 years, in order that your account become big. And understand that you are taking money from your account to live. So let's say you have $50,000. You trade the whole year. Let's say you make 100%. Let's say you are a good trader. Well, how much you have? 100,000. Okay. 100,000. how much you should take for living. You should take maybe 40, 50. If you have a family, you have kids. So if you have to take 50, it means that next year you have only 50,000. So you should calculate well the numbers. You don't say just 10 years and 20 years you become millionaire from $10,000 or from 2,000. These guys who tells you this is not true. This is not true. In real life, it's not true. They do it for advertisement, for their training, for their thing. Yes, they do advertisement. I have seen someone who said that with $100, I can make $100,000 in 1 month. Do you believe that stupid thing? Because these people, they just say things to make people, to make the people who are beginners, who are young, who doesn't know stock market, they just go and throw themselves and buy the training, which is $2,000, $3,000. They buy it with whatever money the guy asks. And then when they begin to trade and he has $5,000, he begin to lose his money 1 month, 2 months, and he will never see this amount that the guy said. Okay, so believe it or not, you should not, as the proverb said, you should not count your chicken before they hatch. If you are living from your money, you should have big money in order to make big money to live from it. Okay? There are some people, they have money. It means they have businesses or they have jobs and they have a trading account, they have investment account, but most of the money comes from his businesses. He put 1 million, 2 million in account. You say, this is my money. Yes. You say, yes, he has 2 million, 3 million, and he told you, yes, it is my work. Okay. But he can fool you with this money, but in real, it is not his money from his trading, but it is investment, but it is his job. Okay, I see someone who is his father. He's a young guy. He's making a lot of advertisement. His father is a dealership. And he has millions of dollars, his father. So he's showing cars. I am a penny stock trader and I am making millions. Okay. So this is how the people, they advertise. So we are not speaking about people who advertise. We are speaking for real people. Real people. Okay. So this is for O2. And then O2 said, I would advise Americans with good accounts to renounce citizenship and move to country with no taxes. Okay, so you advise people to renounce American citizenship. Yes. Where are you from, O2? Where are you from? Now, listen. Citizenship, it is something that you can't renounce. It's your country. If you are born here, American, it's your country, so you can just renounce on your thing because you will go and live. Now, exception, if you are going to a country that it is very cheap and it is stable in economy and there is no political conflicts, and then you take all your money, you sell everything here, and you renounce your citizenship not to be followed by IRS later. Yes, but this is far from what we are talking about here. So please, O2, I will ask you something, please. Please don't use this word advise, because here in my channel we don't advise anyone what to do with his money. It is your money, it is your citizenship. You do whatever you want. Okay, so there are some countries that have no taxes. Yes, which is true. Okay, you can go there even you are a citizen. You can go there and you stay there, and you don't pay tax for there, which is very correct. Thank you very much. Tamba Nair said, what do you think about the current stock market? The stock prices are flying crazy. Now, current stock market, stocks are flying crazy. I will show you, because Tamba, I'm explaining what's going into the market with stocks each week in my subscription. So here on YouTube, I will not explain deeply about the stocks, about the other thing, but I will show you what's going on to the market. At least you have an idea. So let's go to the daily. Now look for Dow Jones. Dow Jones, we have a very long trend. Let's say it begins from here. From August 15. Let's say August 15. And you can see, I can put like this. Let's say here. This is August 15, 2019. Let's say this is the trend. Okay? So yes, there are a lot of stocks that are doing excellent. Some that are doing bad. But it's very good. It's very good. Now we are in 2000. Where is 2020? Let me see. Seven. Thursday 2nd. Yes. So look here. So from August 2019 to December 2019, we have a big trend, which is very good. And now, if we begin with the second, so if we begin this second, okay, let's say I will show you something. Now, if you take Dow Jones, the 2nd of January, it was 288. Now is 294. We have $6 from 1 month and a half. If you invest, let's say you invest in this Dow Jones, you will have $6. It means if you bought, let's say if you put 288, it means you put $28,000, $862. Okay, 28,000. You will make $600 because this is the index. But there are some stocks that do better than Dow Jones, more and more better than this. Okay? So when you say flying stocks, there are, yes, flying stocks. But you should have been investing in those stocks, okay? You should have been investing in those stocks if you know how to trade. So if you know how to trade, yes. Okay? So it depends. If you know how to trade, you should make better than Dow Jones or S&P 500. So let's see the S&P 500, which most of the people in business, they use S&P 500. Let's see the third. Yes, the third is here. So S&P 500, 322, 8, now 1500. So if you have bought 100 shares, like $32,241, or $32,241 on the 3rd of January 2020. Now it is 3,037. So it is $15. You have made 1,500. But 1,500 is small compared to 32,000. Some stocks, they have been doing so great. Okay? So it depends where you are in the market. So let's go back. Let's see the other questions. So as I told you, Tamba, when you said the stocks flying and they are doing best or good, understand that you are speaking about some stocks in the market, which is correct. But you should be a good trader. Now, for us, we have our trading account. You can check how much we make. You can check the stocks that we are doing. And before I forgot, guys, because I talked in the beginning about this, if you have already bought my training or part of my training, you will have 50% in our subscription. For example, my subscription now is $50. I will just give you this very quick, guys, before I continue. So let's see, just an example. At least you will have an idea. Okay. Yes. Please, guys, just look for a minute. Okay. Our account is making 23.62% for today. It means the Friday. This is how it makes. Investing account is 19.68 up. Okay. Now, if you have already bought the Djellala All Strategies 20 training, you can get 15% at this discount, and you can get half discount for my golden subscription. For example, my golden subscription is $54.99. You can get it at $27.49. You will have to see a lot, okay? You have to see a lot, because you will see the trading account, you can see the investing account, you can see the stock market, what you are doing. There is stock upgrades and picks. You can see them each week. You can see recommendations on stocks. It means it's a lot of stuff you do with the golden subscription. So if you have already bought training by video or by ebook, you can send me an email if you have bought, and I will tell you what you should do in order to get this. Because this is just the to get a discount is by invitation only. Is only when you bought my training. You should send me an email, and I will see your thing. Now for silver subscription, if you bought 15 training levels or by video ebooks, you can pay only $14.99 instead of paying $29.99. Okay, you don't see the investing account and options and things that we speak about. You can see it in the silver account. Now we have the last one, which is the penny stock search subscription. If you bought 10 training levels by ebooks or by videos, you can get this subscription at $9.99 instead of $19.99. So this is my my thing. If you want to check everything, just click the links and you will get more information. Okay. Okay. So guys, if you have any question, you just go to my email, you send me an email and I will explain more, or you go to my website directly and I will explain. So let's continue our thing. So O2, he said, but why not use other people's money? Buffett did it with partnership. No, listen. Partnership, okay? What if you lose money? Partnership there are contracts and you should have a license from the FINRA. You should do the series, and most of the time they don't accept you if you are not under broker. You can't pass the exam if you are not under broker. So these things that they have done before, it was easy. Warren Buffett has done it before the rules. Now the rules are very strict because you think Warren Buffett at the time, I don't think that there is rules about to have a license and to disclose things and so on. Okay, so now it becomes more difficult. And understand that if you don't know how to trade, and some people they give you 100 million or 200 million, and then you blew up your account, they sue you and you will be in the prison. So it's not as easy as you might think. Okay? Before it was very, very wild in the stock market. But with FINRA, with the Security Exchange Commission, they put a lot of rules. So it's not easy as you might think. Now, Warren Buffett has his friends, his family, and he made a lot of accounts. He made, I think, partnership, I think he made 7. And in his rules, he was very greedy. Do you know what he did? I have, for those who wants to understand what Warren Buffett did, please. There are videos. I put them in my channel, and they speak all about Warren Buffett and how he has made his money. I will give you the summary. The summary is that he takes 45% of the profit each year. But when he loses money, he only pays 4%. So you see that the contract he has done, it is good for him. I'm not saying bad for them, because they make money, but understand that he just loses 4% if he lose. Let's say in 2008, he lost 50% of his account. Don't tell me, no, Warren Buffett has not lost 50%. Yes, he has lost 50% because his account was 195 billion. $195,000 for a share. It goes to, I think, to 80 or 90, 95, I think, or something like that, 90,000. So he lost like the market, because the stocks that he owns are in the market, and most of the stocks lost 50%. So what is his thing that he do? He will pay 4%. 4%. Let's say it is $7 billion. But $7 billion, let's say he has 30 billion. But for the other guys, they lose 50% of their money. Do you understand? Because they lost. They don't make money. They lose 50%. But him, he only lose 4% of his money. Do you understand what I'm saying? So he is advantageous. It means he used the people's money in his own advantage. But this doesn't exist anymore. This is an old, very, very old contract. They can't come. The Social Security, Security Exchange Commission, and they will tell him nothing, and they will do a lot of stuff because it is an old contract that it was accepted in the past, but no one will do it now because it was advantageous. So you understand? And O2, what do you think if there are some people who have done the same, but they trade, they don't invest, and they lose the money? They sue him because they lose all their money. They do things that are so bad, and he ends up in the prison because all the money has been lost. Millions and millions and millions. You understand? So it's not easy. Now, Robert T. Jean, he said, when you buy a house, you borrow money. Okay, listen here. When you buy a house, you borrow money, it's correct. But you will be paying interest rate all your life. It means you are working for someone else. Do you understand this? But, owning a home, if in 30 years, if you are, for example, 20, you buy a home at 20, you have a good job, and at 50, you own your home. This is excellent. Excellent because you don't pay any more interest rate, you don't pay mortgage. What do you have? You only have your bills, which is one of the best things to do in life, is not to pay mortgage. You own your own home. And this is one of the dreams of Americans, is to own your home. Okay? But if you have money, you should buy it. You should put all your money at first to buy it. Some people, they have good jobs, but they don't think to pay it very quick. This is a problem for them. Because they want to have a very big house. Try to see, for example, lawyers, doctors, in order to show, in general, okay, here in America, in order to show that they are making money. So what they do? They go to a place when the house is 500 or 1 million. They buy fancy cars. But all these is with borrowed money. So when you borrow money, you are working for someone else. You are paying interest rate. But what if you lose your job? What if you are a doctor and you do a mistake and they take your license? What do? You lose everything at once. Because it is not your money. Also, you will be investing less. Because you have a big mortgage, you have a big car mortgage, you have a lot of utilities a lot of bills that are so expensive. So all your money goes without investment. And this today, when I am beginning to speak about how fast you can grow your trading account and investing account, I spoke about 45 minutes about investing account. Like 401k, like Roth IRA, like your own account. And I explained very much. So guys who come late and you don't listen to what I say about investing account, please tomorrow go back and listen from the beginning. I have explained a lot of things in investment, in personal finance, and a lot of stuff. Okay? So as you can say, we spoke about the house. Yes. O2 said, it's not always bad to use other people's money. Yes. But who can give you your money and then you lose it? Who? And even if you borrow, how much you borrow? Do you think someone who has $1 million, he said to you, oh, okay, you are my friend, take this $1 million and trade and give me some profits? And what if you lose his money? $1 million, you lose it. But it is far away of, and the government, there are some things, but in real life, it doesn't exist these things anymore. Okay? If someone has your friend, whenever you talk to him about stock market, he say, no, I will not give you my money. He will give you money, and I always give you this money. This example, because people are greedy. I will tell you yourself. I will give you 2 examples, and tell me for the truth, which one will you do? Because all the people are greedy. They think only about themselves. I will give you these 2 examples. You have a friend who has a restaurant, and he tells you that I am making $20,000 a month. And it's $20,000 a month. It's a big money. So, and you have some money. So then you give him a suggestion. You say, what if I go and become a partner, your partner? He told you yes. Give me $100,000 and you work with me and we become partners and I get $10,000, you get $10,000 each month. What do you think about that? Oh, you say yes. I will stop my job because I'm getting 3,000 or 2,000 or whatever, and I have a business and I will live the better life. But understand that your friend will never accept your offer. Why? Because he is successful. He is making 20,000. He can make it bigger. His restaurant, he can make 30,000, or he make another restaurant. He can make 40,000 because he succeeded with his management, with his way to do business. He knows how to make more money because he can make another restaurant. He make another 20,000, and he make $40,000 each month. He will be a millionaire in a few years. So he is successful, and this success, no one is giving his success for free. And even if he accepts, he asks you a lot of money because he will put this 100,000 in his pocket, and each month you should divide with him whatever he makes, and you should work with him, or because it's not just a thing. Okay, so you understand? Now I give you the second example. What if you have another friend who has a restaurant, but he is losing money? He is not making money. He is paying money to his workers. He is paying for his expenses like fruit, vegetables, and stuff. But he only make 1,000, 2,000 a month. So he is not really making money, although he has a business. So he needs money to fix a lot of stuff, to do a lot of stuff, to change his location because it is too bad to another one. But he has no money. Are you going to give him 50,000, 100,000? Because you know he is a loser. He is not making money right now. Do you make hopes that this guy will be successful in the future and give him your hard money, where all your life you have saved $50,000? Are you going to give it to him right away? And you say, just take this money and they will be partner and we make money? And what if after a few years he is still making 1,000, 2,000? What are you going to do? So you lost your money. Because if you are waiting for him to give you $500 a month or 1,000, this is not a good business. You can't make a living with $1,000. So you understand that people are greedy. They want only one successful to be with him. They don't want to be with a loser. That is life. You can see yourself. Do you accept if someone he has loans and he can't pay, and he asks you for a loan just to give him money, and he say after 1 year or two I give it back? Are you going to give him 50,000 or 60,000? He might lose your money also because this guy is a loser. He doesn't know how to use money or a business. Okay, so you understand? So this is a type of greed that I'm speaking about. Let me see what's the time. Now we have about 15 minutes. I will continue with your questions. Now, Robert T. John said, is it true that the broker make money when the people lose money? No. Listen. A lot of people, they don't understand what is this broker. Broker, what does it do? A broker, he is just the middleman between you and the exchange. He is the middleman only, because you can't buy directly from the market. If you want to buy directly from the market, you should be a market maker. You should pay $1 million, $2 million in order to be a market maker, to buy from the bid like market makers and to sell and to do whatever you want. But you don't have money, $1 million, $2 million to be a market maker. Okay? So, a broker is getting commissions, and he can give you a loan like a margin account, and he has interest rate. It's like a bank. A broker is nearly like a bank. It's not something else. Now, when a broker teaches you how to trade, do you understand that the broker has billions of dollars or millions of dollars, but he will never trade with his money because he will lose, because they don't know how to trade. That's why they teach you for free. You can go to any broker, your broker, you find that he has webinars teaching you futures, teaching you, but they don't make money from that. Those teachers, most of them are losers. Okay? They are losers, that's why they are there with the brokers. I have been contacted with a broker. He works with mutual funds, and he told me for 10 years he has never made any money for 1 year. He has never made. I told him, because you do the same thing. Come on, I teach you, you will be making money. But some people, they don't believe. They say, oh, you are on YouTube and you say, okay. I say, okay, if you want to see my records, you should pay. I will not show you my records just to see how I trade. So that's it. So a broker is making money through orders, through commissions, through giving you a loan like a margin account. Because when you are a day trader, for example, or swing trader, and you need money, you use a margin account to do, for example, selling short. So you use his money. So when you use his money, you should pay him interest rate. This is how they make their money. That's why they want to have a lot of customers, and they want you to trade. They want you to be a day trader, not a swing trader or an investor. Because investors, what they use them good for having their shares, to give it to you as a day trader to sell short. They need them because they make money from their shares. Okay? So that's the deal. So as I told you, if you lose your money, it is your problem. Let's say you are sad, you lose your money. You call your broker, you say, I am sad. You say, I'm sorry. I am sorry, you should learn better training, or you should don't do that anymore because you lose a lot of money. They can't say nothing to you because it's a business. It's a business. He has nothing to do with you. He just helps you to connect with the market, with the exchange. He is not your friend. He is not your enemy. He's just doing his job. Now, when you make money, even if you say to him, I make money, he say, congratulations, you make money. So trade more in order that he makes money. Okay? Because you are not going to give him money when you make money. And when you lose money, you are not asking him money. So there is no partnership with him. So understand that. Okay? Tony, thank you very much, Tony, for coming. He said, my question after the subject is, what determines the price of the stock? Like, who decides what XYZ is going to be worth? It's you. Tony, it is you. It is me. It is all the people who participate. I will give you an example. Facebook has good earnings and we have a gap down. Who makes the gap down? It's traders. They think, a lot of traders, they think that Facebook is not doing well, so they short it. So it goes down. So if you come at that day and you see it's going down, and in the afternoon, after the market hours, you can sell short with them and you can make money. So it is you who decide. I decide, all the people decide, but it's like a democracy. The more votes, the people who will be winners, either going long or selling short, because there is always a fight. For example, for you, understand that when you are buying, someone is selling short. So, but because it is the opinion, he thinks that the stock will collapse. You think the stock that it's going up. So the market is always opinions. Okay, it is always opinions. When you see the chart, you make an opinion. But understand that the guy, when he see that, he thinks that the market will collapse, so he sells short. But you see the chart and you say the stock will go up, so you buy long. Okay? So, but the people who win is the more votes. If a lot of people buy, there is pressure on the stock, it goes up. Because a lot of people buy. This is just a software that does this. Let's say if a mutual fund comes and he pushes the stock will go so good and the trend will be so good. But the people, they come. It's like when there is a feast. Understand that. It's like a feast. When there is something good, the sweets, some honey, something sweets, all the people, they go. For example, if someone of your friends, I give you just this, something which is it's like social. If someone invites you for food, there is a party, generally, most of the friends will come. But if you invite them, you say, I am in trouble, can you come and for coffee and just we speak about my problem, can you come and help me? Understand, I'm telling you this for true, that if you have, let's say you have 25 friends, the 25 friends, they come to your party. They party, they drink, they have fun, they dance. Okay. But if you have trouble, if someone comes, one or two, you are lucky. You are lucky to have one friend or two. But all they will make excuses. I'm sorry, I am traveling. Sorry, I was in the hospital. Sorry, I have a doctor appointment. Sorry, I'm taking my wife to somewhere else. No, they give you, sorry, my car is broken today. I can't come. They give you excuses. This is life. This is social life. This is how we live. People are just, stingy. They are greedy. A few people are good. So you should keep the good people near you and forget about the other people. It's better that you do a party with few people that you know that they are good for you. Even if you are in bad situation, they will help you. These are good friends. But all the people, you have 50, like in Facebook, you have 5,000 friends, 5,000. But in real life, you will not find one or two that are good. Most of them, they are fake. Okay? So, Tony, I answered your questions. What determines the value is the people. It is the people who make the value. It is not someone else. But there is an influence. Analysts, when they say, oh, this stock is good, some people, they don't know, they just go and buy. Yes, they can influence. People who have social media, TVs, they can influence, yes. Golden Gang Gamer, hello. GPP Stocks P, hi, how are you? Ramin Alazov, thank you very much for coming. You have to use older version in Internet Explorer. Ramin Alazov, I don't know. For me, I have Internet Explorer. I use it, I don't know which version, but it works with Internet Explorer. This chart, okay? But there is a broker chart. There is a broker. There is broker chart. You should have an account And it is for free, but it is there is a change. The other letters, S, D, P, V, I don't know. Hello from Cyprus. Which is better, COD or spread betting? Now listen, I don't do spread betting. I don't do this COD. Okay. COD, do you mean the stock that it is called COD, or what? What is this abbreviation? Is it a stock or what? CFD. Yeah, you are speaking about something that we don't trade here, like CFD in Europe. But CFD, it's a leveraged thing. It's like options. It's like futures. It's very dangerous, and it is not for the long term. You can't invest in a stock like this. And when you buy Apple, like a CFD, you don't own Apple. You don't own it. It's just a duplicate that your broker do. And it has nothing to do with Apple here in America. It has nothing to do with Apple. But they just give the same name, and they use money that it is leveraged. It means if you stay longer, you can lose your money. Even the stock is going up, you lose money. So be careful of this CFD and COD. It's better for you guys that you buy real stocks. Even in your Cyprus, I don't know how many stocks do you have in your stock market. Or you can buy real stocks is better, because at least you own the stocks. Okay. C. Charlton, thank you very much for coming. KSP to y'all, thank you very much for coming. C. Charlton says, sorry, I am late. Yes, we always do it from 9 to 11. You can watch it tomorrow, because I have spoken about investing and trading account, how to grow them. You can watch the 1 hour first that you don't come. I supply a lot of information, so you should be aware of that. Ramin Alazov said, can you say again if I could swing trade with Roth IRA, and will be any tax advantages if I swing trade or little longer? Yes, Roth IRA, I will speak to you in general. I have spoken about it in the 1 hour. So guys, I have spoken about Roth IRA in this live. So go back tomorrow when the video is processed. Go tomorrow for the first hour and listen when you have time. Listen the whole hour. I speak about investing account too much, about 401k, about Roth IRA. Now Roth IRA, so what's the difference between Roth IRA and your individual account? It's just you don't pay tax. You don't pay tax. That's it. It means if you make a lot of money, it's good for you. But the only thing that you should know about Roth IRA, if you want to take money, you should take only your money that you put. Let's say, I'll give you an example. Let's say through 5 years, you put $10,000. Let's say you make $10,000. You have an account now, $20,000. Now, in order not to have taxes, you should only take $10,000 that you put at first, which is a contribution that you put your account. You put only the money that you put, but profits, no. Profits, it's like 401k. You should wait for 59 years and 6 months. If you want to take these profits, for example, you want to empty your account. To empty it, you need this 20,000. So 10,000, you are not going to be taxed on 10,000, but the other tax, you will pay penalty 10%, and you will pay tax. So you understand now? This is, and I have made a lot of videos about Roth IRA. Go to my channel, put Roth IRA, and you will have many videos explaining this. Okay? Top Series said, hi Karim, Good explanation. Does playing off home early better or invest in the extra money in the stock market? Thank you. Now listen. It's better to do both. Let's say if you have good money, you are making $4,000, $5,000, you can contribute more money to your house, and you can change it from 30 years to 15 years, and you push, because if you put it 15 years first, you are not going to pay more interest rate. You pay less than you put 30 years. This is one thing. Okay? This is one good thing. 15 years, and especially now and last year and now, if you have excellent credit, they can you can get 2.5%, you can have 2.80, you can have 3%, which is excellent. Because when you have credit good or excellent credit score, you can have the best, and you can do shopping in mortgages. Don't accept anyone. You should see all 6 or 7 or 8 and compare what they say to you. If you are interested, top series. If you are interested, you can send me an email and I will explain more, because we are. Yes, we have finished the lesson, the live now. I have spoken with 2 hours, so I'm tired. So if you need more explanation and you have questions, send me an email. I will be happy to help you more. Okay? Because when you let's say 15 years. Let's say you are 25. By 40, you finish. You own your home. Do you know what does it mean you own your home? It means the bill the mortgage bill that you pay for 30 years, you will stop paying that. So all this money will be yours. You can invest more, you can go to have fun, you can have trips. So it's very good to own something. And it's very good if it's quicker. Okay? Especially those who have businesses. You have a lot of money, so your home should be taken care of very quick. You don't leave your home for 30 years and you have businesses and you have money and you begin to spend money here and there. The home is first. Okay? The house is first. Because it's the biggest bill. Especially in big cities, housing is very, very expensive. So you should change the city, or you change to places where it is cheaper. You understand that America here, you can do a lot of things to change your situation. You shouldn't paying $3,000 for a mortgage, and you are paid $5,000. But you can go to another place and you pay $1,200 and you have your single home, okay? And it's with the same job, okay? So the last question I see is, how come some stock with lower market cap cost more than some with bigger market cap? No. What do you mean by cost more? Please, the guy who has letters in his thing, the last one, please answer me very quick, because I'm going to stop the live. What do you mean by the cost maybe more than bigger market cap? What do you mean by cost? You buy 1,000 shares of penny stock with $1. You pay only $1,000. 1,000. You find a stock that it is 100. You pay 10,000. What is this low cost and high cost and bigger cost? I don't understand your question. So please, can you formulate your question again, or explain what does it mean? No, you don't understand. You don't explain to me. I give you an example. You buy a stock that it is penny stock, $1. You buy 1,000 shares. It is $1,000. You buy, for example, a big stock, $100. You pay $10,000. Well, why do you? What does it mean? Lower market cap cost more. What does it mean? Cost more? It costs less. It's the opposite. You buy 1,000 shares, it is $1,000. So it is lower than you buy 100 shares of $100, which is a bigger stock. So it is 10 times more than penny stock. So I think you want to ask a question, but you don't know how to ask it because I don't understand. Can you give me an example? I give you an example. Can you correct me and give me your example? If you give me an example, I will understand what does it mean lower market cap. What does it mean market cap? Market cap, the shares multiplied by the price. Why a lower cap is a small company? Why? Let's say we have 1 million shares. By $1 a share, so the market cap is $1 million. So it is a very, very tiny company. Can you compare it with Apple? $300 something. You multiply with billions of shares? No, you can't compare that. So you say, I think he means the price compared to how many shares for sale. No. You can buy wherever you want. You mean low volume? Maybe. You mean low volume, high price? No, volume is just the traders who trade them. That's it. But I will give you an example. Apple and Facebook, you can find 50 million shares traded a day. But penny stocks, you can find stocks with 20,000 only, 20,000 shares traded a day. So volume is about who is trading. That's it. It has nothing to do with the price. So don't mix things. Volume is only how many people traded shares in the day. It has nothing to do with the stock. It's big, it's small. It doesn't matter. So, for example, Tesla has a higher price than Apple. Yes, but the volume of the shares, it has nothing to do with the Tesla with Apple. It has nothing to do with that. Volume is only the people, how many shares they bought in a day. This is volume. Volume could be big in a penny stock, could be small in a high stock. It could be anything. The volume. Don't think about volume. So let's see what he says. Spot on ramen. No, listen. Ramen. He meant maybe outstanding shares. No. Smaller stocks have very small outstanding shares. Very low. Let's say you compare, as an example. Let's say. You said, but why is Tesla price higher than Apple? It's because of the trader. What's this relation with Apple and Tesla? Tesla people, they like it. It goes up. So it's the people who decide. It's the traders who decide. It is not the company that decide. What do you think about Walmart? Walmart is the biggest retailer in the world, and it is making maybe more money than Apple or than any other. But the stock is 100. So it doesn't mean that, and it is making more money than others. So don't mix. You are mixing things. It doesn't fit. Volume has nothing to do with the stock. Why a stock is going bigger? It has nothing to do with the company itself, but because of the traders. The traders make the company look bigger and bigger and bigger because they like it. There are more investors. They like it. Okay? They just like it. There is nothing else. Some people, they invest because they see it's going up very fast. They invest. That's it. But Facebook, no, Apple, it was 100, it goes to 700, then they do the split. So Apple, if they let it, now it is maybe $10,000 or $15,000 a share, because Apple do split after a few years. It do split and do more shares. So the bigger companies, they have bigger shares outstanding. It has nothing to do with the stock price. Stock price has nothing to do with shares. Some companies are big, but they're like AMD, for example. AMD is one of the 30 biggest stocks in America, but its stock is only $40. Okay, it's only $40. But Tesla is $700. So why Tesla is 700? It's just because people, they like it. They don't like to buy AMD. They like Tesla. That's it. Okay? You said because Apple has a bigger market cap. No. It has nothing to do with market cap. No. Because Apple was, before it was $700 and they do the split. Understand that. Apple do a lot of splits. It means when the stock is growing bigger and bigger, they put it down to make other people buy, and they make more shares. So they don't like that the stock will become 1,000, 2,000, 3,000. They always cut it by splits in order to be attractive to people to come buy. Because for me, let's say the stock is $10,000. I can't go and buy one stock that is $10,000. Why should I buy it? It's too big. It doesn't move that fast. But when it is small, it moves so fast. Tony said, he just explained it to me because people decided Tesla wants it to be higher. Yes, the people decide. It's not Tesla that decide. Apple and Tesla, they don't decide in the stock. It's the traders, it's the investors who like the thing, okay? Le Mont Blanc. Bonjour, Le Mont Blanc. Comment vas-tu? Advanced Trader, hi, you come late and we are ending the live session. It was a very good live session, but you come late. So, Le Mont Blanc, he said, tell me what to take to start a job with any fund. Now, you should belong to a broker or to be a big bank, and you ask them. Because this is related to business. If you have a degree in business or in something like that, you can see a broker to join him, and then you can ask the procedure. Because you should have a license to be a mutual fund manager. You should be licensed by taking series. You should go into the broker first and then ask these questions. Because outside they will never give you. This is a secret thing. People who make money, they will never show you how do they make money, because these jobs are never advertised. You should go and search and follow them and apply for them. They accept you. You enter, and then you see the money. Then when you see the money, then you do what you can do in order to get better positions. So you understand? SD. So please, guy, who have these letters SD, S, I don't know. Please change change your YouTube ID and put something like a name or like something else. At least I will pronounce your name. I don't know how to pronounce your letters. What do you think of Uber? Uber after I will show you Uber. And what's the other question? How much do you make a month day trading? Jonathan Ferraro, I will answer you this question, please. There is a proverb here. I think you are American. Ferraro, it looks like Italian, but I'm supposing you are living here. You are American. There is here a proverb that says, if you know this proverb, don't ask a woman how old she is, and don't ask a man how much he makes. If you want to know how I trade, what is my account, virtual account that I do for subscription, please subscribe to Golden Subscription, and you will see my stocks, you will see my investing stocks, you will see how I trade. I will give you the thing. You can go, you can subscribe if you want, and you can check. But this is a business, so you should be a subscriber to my subscription. Now I will do the last thing about Uber. I will answer about Uber. So give me a minute. I will show you the chart. So Uber, it has a gap up last time. Yes, look here. Uber has in this day, which is Friday, last Friday. Okay, it's not yesterday, but last Friday, it has a gap up. It means it's good earnings, but the stock is not going up; it's going down. So, if you are interested to know Uber and Lyft and the other stock, you can you can go and check the Golden Subscription. That's why I give a discount for the guys who have already bought our. And you can do penny stock for $14.99 a subscription, or you can buy my training and the other stuff. Okay, I put an up what we call stocks updates, and I have a portfolio, and I always show you what I bought, what I sold, what are the good stocks to buy, what are stocks not to buy according to my strategies. And I have very big discounts for my training. If you buy my training, I will give you 50% of the discount of the subscription. It means I have a lot of discounts. So guys, since we are at the end, please watch, go to my website, check the things. And if you need me, just send me an email. The email, you find it in, I can give it to you right now. For those, it's always in my videos, description. And if you click on my website right now, and you click on my email, or you just copy my email, and send me an email, whatever question you have, training or subscription, or you have other questions, because now it is 11:19. I'm supposed to stop at 11, but guys, I want to please you, and I want to finish us answering all your questions. But some guys come at late and ask other questions, so that's why we'll be late. Okay, so guys, check my website, check the subscriptions, check the training levels, all the discounts, all the offers. If you have questions, go to my video or any video on YouTube, on my YouTube channel, and check the email, which is here right now, and then just send me an email. I will be helping you. Okay, so as we wish, this is the last thing. The market is still strong, so the stocks could be going up so well. So thank you very much for watching, and see you next week.